Hi, everyone. Thanks very much for joining us for this webinar in which we're going to go over our recent Coindesk quarterly review. This is the first of a series of reports in which we're going to go deep into some of the metrics that are going to indicate the adoption that's going on in the crypto asset and blockchain space. Now, adoption is a fundamental aspect of not only investment in this space, but also in understanding what the eventual use cases will be and the impact it could have on our society. And regular listeners to our webinars will have heard from me before, and you've heard from Galen as well. This is the first time Christine is joining us. It's also the very first one that we're doing all together. I don't know about you guys, but I'm quite excited. Now, I'm going to hover around the edges because Galen and Christine are the ones who did the work on this report. So they're going to talk you through their favorite slides. You might even find them arguing a bit, who knows. I'm going to hover around, I'm going to hover in the background, and I will be fielding your questions. So do please drop those questions in the box you see down towards the bottom, and I will either interject when Galen and Christine are talking about slides, or I'll leave them till the end. We'll see how it goes. So, guys, over to you.
Great. Thanks, Noah. I'm going to start off with a few slides from the quarterly report. We're not going to go through the whole thing, but we are going to select a few. And one of the approaches we've been taking here is to look at some of the narratives that have caught hold around various crypto assets, those that are credible and that seem to have gained momentum among people who believe in, believe crypto assets are a good investment, that there's a future for them. And one of the first of those that we'll be looking at is this idea that institutional investors will participate, that this will be something that financial institutions will need, variety of narratives around that. For example, the idea that Bitcoin will replace gold and therefore central banks will be demanding it for treasuries. And so therefore those holding it today stand to recoup a large gain if that happens. So we're looking at institutional activity and this notion of institutions coming in and thinking about what are some of the things we can use to actually measure beyond anecdote of, this bank or this fund or that fund has adopted crypto assets in some way, looking at metrics that would go across the entire asset category and would really indicate that these institutions are in some way increasing in their participation in crypto assets. So one of the first metrics like that we've looked at is with the growth in regulated derivatives markets. We see an opportunity to sort of look at a bellwether for institutional participation in crypto. Specifically, CME backed are the two major providers of Bitcoin futures markets in the U.S. They're both regulated by the CFTC. And one of the things that distinguishes these regulated crypto derivatives exchanges from other less regulated or lightly regulated or offshore crypto derivatives exchanges is their relatively low leverage. CME and Bakkt both offer leverage somewhere between 2 and 3x on their markets, on their futures markets. And that is fairly low, although maybe appropriately low for a very volatile asset. Certainly a lot lower than the leverage you can obtain in offshore derivatives markets like BitMEX or FOB or OK. So why is that important? To us, that indicates, well, who would participate in a market with such relatively low leverage? We hypothesize that it would be an institutional investor, that it would be somebody with a fiduciary responsibility who cannot participate in an offshore market, an offshore lightly regulated derivatives market. And so therefore, if we look at the size of these regulated Bitcoin futures markets, that's an indicator for institutional participation.
Can I jump in with a question? I presume this is greater leverage than they could get on the spot market. Is that right?
I think so. I mean, spot market, sort of margin trading, you mean?
Yeah.
There's not a lot available. There are a few exchanges that offer margin trading. I don't think there are any, U.S.-based exchanges. And even if they were U.S.-based, there's no sort of regulator who claims authority per se over such an exchange, right? Whereas these derivatives markets are, this is the CME. It's or even backed. It's operated by ICE. It's regulated by the CFTC.
And it's probably fair to assume that institutions insist on some kind of leverage. I mean, it's the best way to get a bigger utility out of the capital that you're putting in.
The importance of leverage, I think, can't be can't be overstated. And the graph on the bottom of this slide strongly indicates how important it is to investors. The line graph at the bottom shows what happened to volumes on BitFlyer's derivatives markets. I believe this is the perpetuals market that they offer. BitFlyer being a Japanese exchange regulated by the Japanese Financial Services Authority. And when the FSA reduced the allowable leverage down to 4x for these exchanges, for exchanges operating in Japan, this was in, I think, May of 2019, the volumes on BitFlyer dropped precipitously, as you can see from that line graph there. Just there to underscore the importance that investors place on leverage. I think most people understand that implicitly, but this is to bolster our case that really these low leverage or relatively low leverage regulated futures markets are the place where people go when they want this kind of exposure, but their options to get that elsewhere are limited. So as you can see from the bar graph there, the line is on the top there. The line is the Bitcoin price. The bar represents open interest expressed in Bitcoin, not in dollars. And Noel and I have had lengthy discussions about whether that was the right decision. But I do think it, when you put it next to the price graph, it shows you that even as the price went up in July, so did the amount of Bitcoin denominated open interest in these markets. It did not go down as investors rebalanced, for example. And you can certainly see toward the end of the year how things kind of leveled off. Enthusiasm seemed to dampen a little, and we ended up basically where we started on the year. So in terms of the institutions coming in, 2019 not a banner year for that narrative.
And why do you think that is? I mean, the graphs do show that they're not quite here in the enthusiasm that we expected. Why?
It's anecdotal, but I think everyone I talk to is kind of like, don't care that much.
Yeah.
Still not really sure why Bitcoin exists.
Yeah, but it's surprising given what's happening outside and not just monetary policy in terms of geopolitical tension.
Sure.
You would think that this is what this was made for.
You would think that Jerome Powell and Xi Jinping talking about crypto assets might make people take interest. Mm-hmm. I think taking interest is one thing, but actually deciding to allocate funds or participate in I think you probably have more people aware of it and understanding it. The digital gold narrative is something people can get their heads around from a traditional finance perspective, but there's a far mile to walk from there to actually allocating capital to it.
Yeah, and it comes down to what we mean by institutions as well. We know that a lot of crypto
right.
funds are here. Obviously, we also know a lot of family offices and usually
right.
smaller hedge funds as well. But when we're talking about institutions, I guess we're really referring to the big pension funds and the endowments and the insurance funds even, but they have to justify this kind of decision, and that's hard to do.
I mean, even on a smaller level, I think think about it, justifying it in terms of your own career prospects. What's the what's the benefit? What's the risk reward to be the one who's championing Bitcoin inside your, whatever size institution or organization you might be operating.
And you want to be remembered as that person.
Right. And I think investors tend to think about, if we make a product and offer it to our clients, what are the flows going to be into and out of that? Is this going to result in more management fees, more assets under management for me, or is it going to be a sort of what's the sort of potential there? And I don't think the potential is big enough to outweigh the risk that it's going to be that.
Yeah, and you and I talk to a lot of big investors, and a lot of the founders of crypto funds of all types come from traditional fund management industry, possibly because they weren't allowed to invest in the sector that they truly believe in.
A lot of people who, that seems to be the path. And there's certainly a lot of, there are pension funds that have exposure to Bitcoin and crypto assets through managed funds that they are invested in. I think, that kind of activity seems to have increased in 2019. So certainly not like a perfect barometer here, but nonetheless a barometer that I think we can, look to and on a week-to-week basis say, okay, what are institutions doing? What are they up to with regard to Bitcoin, at least? So moving on to another, popular narrative. This digital gold idea has certainly caught hold with with some strength as the sort of dominant narrative or meme around Bitcoin. I think Bitcoin, more than any other crypto asset, probably has a strong story that has caught hold, that a lot of people can, even if they don't come from a crypto background or haven't sort of already bought in on crypto, can kind of understand and at least evaluate, if not get behind. So we want to look at that, digital gold. Is Bitcoin becoming a store of value and a safe haven in these turbulent times? And one indicator that we looked at should be familiar to people who have, been involved with Bitcoin or have looked at Bitcoin for some time. Bitcoin is, the ledger is kept using a system called unspent transaction outputs, and those UTXOs, as they're known, have a timestamp, with the upshot being that you can tell the age of every Bitcoin since its last transaction. You can see how long it's been since its last transaction. This is also known colloquially as HODL waves. So the HODL waves chart that we're presenting here is, I think, a positive one for the Bitcoin store of value narrative. And the key points are the dark blue and light blue bands that you can see there at 12 to 18 months and 18 to 24 months. So at the beginning of 2019, the 12 to 18 month band there, where it's at its fattest, as you can see the data call out there on the left side of the chart, that represents people who bought during the second half of 2017. These are people who bought the run-up in the bull market of 2017. Not sure exactly when they might have bought it. Maybe they bought in December at the peak. Maybe they bought, in July or August when things were just getting started to really heat up. But whatever the case, these are the buyers who bought when, animal spirits were at their highest. And, what's interesting about those buyers, and I'm using buyers here loosely, right? We don't know, we can't really say that these Bitcoins represent buyers. What they do represent is that these Bitcoins last transacted during that time period. So let's say that these coins that last transacted in the second half of 2017 continued to stay where they were. They stayed put because you see that 12 to 18 month band kind of transition into an 18 to 24 month band. Basically, the 12 to 18 month holders became 18 to 24 month holders, even during a price run up in the first half of 2019 that saw Bitcoin's price double and nearly triple. So what could we take away from that? I think you could take away, well, there are some people here who want to hang on to this thing, maybe even if they could sell at a profit. I think you'd want to get a little more granular than that if you were really going to hang something on it. But I think it's what we're aiming to do here is just sort of demonstrate how these UTXO ages can be used to evaluate the narrative. Are people treating Bitcoin as a store of value or even a speculative store of value, i.e. something that they buy and hold for the long term? And in terms of buy and hold activity, we are seeing some positive indicators for that in this chart.
I've often heard the argument that no way can Bitcoin be a store of value given its risk and its inherent volatility. But I've also heard the counter argument, which I find very appealing, that we are speculating on it being a future store of value.
Yes, exactly. I think, Jerome Powell said it best. Not the person you'd expect to, wrap up Bitcoin neatly in a nutshell, but speculative store of value is exactly what Bitcoin is. It's definitely not a store of value today, but you're buying it and holding it in expectation that it will be in the future. And by doing that, your activity much more resembles a store of value type investor than it would kind of a more speculative trading investor. The reason HODL waves are important is because, once Bitcoin is sort of hitting a profit for you, if you're a speculator, you want to sell it, lock in your profit. But if you're the more long-term buy and hold investor, you'll hold right through a run-up and maybe into the next run-up. And I think that, we want to look for signs of that mentality when we're evaluating the Bitcoin as digital gold kind of narrative. So another use case that I think most people don't really think of as a use case. People say, well, there's no use of Bitcoin, it's all speculation. But as many people have pointed out, speculation is also a use. And so, what do we mean by that? I think of like Wences Casares, who was an early Bitcoin proponent, says, it's really difficult to talk to an American about money because it's like talking to a fish about water. And I think the same thing with speculation. It's difficult to talk to an American about speculation because we're surrounded by potential speculative instruments, penny stocks, high-tech stocks, biotech stocks. We have no shortage of options if we want to go and put our money at risk and put it in a place where it can have some volatility. I think, that's not necessarily true for everybody all over the world. And so, Bitcoin being something where anybody can access it regardless of whether they can have a Schwab account or not, gives a sort of access to speculative instruments or high volatility instruments that maybe has not been seen before. So, I do think that speculation is a legitimate use case for Bitcoin and for other crypto assets. And so, we want to look at, how can we measure a speculative use of Bitcoin as distinct from other potential uses? And one metric to measure that would be the amount of Bitcoin that's held on exchange. Is Bitcoin the sort of base asset for trading into and out of various other more volatile or more risky crypto assets? Is it the thing that people use when they're trading on exchanges? And hard to pin that one down because it requires us to know which Bitcoin address belongs to an exchange and which one belongs to something else. But I think one of the most honest data sets we've seen came from Chainalysis on this, and they have an upper bound and a lower bound, as you can see in this chart. And really that comes from the sort of inherent ambiguity in identifying an address. For example, if an exchange transfers a large sum of Bitcoin from one address to another, are they just moving it internally, or is that a whale withdrawing funds? Sometimes it can be hard to make that distinction. So this chart reflects that ambiguity, but I think you can see how it clearly leans toward growth in the balance of Bitcoin held on exchanges, and that's consistent with what we've seen from other data providers as well, including Coinmetrics has published some research on this, and I think their numbers in terms of growth are much more on the dramatic side. So more people putting their Bitcoin on exchange, presumably for the purpose of trading, possibly just for the purpose of convenience and custody. I'm pretty sure I've got some Bitcoin sitting on Coinbase that I'm just lazy about moving into my, my cold storage. But in any case, more Bitcoin on exchange we think of as a bullish indicator for the exchange use case, the speculative use case. Of course, Bitcoin isn't the only kind of baseline asset that people could use it isn't the only quote asset that people could use to trade into and out of other assets on exchange. Tether has risen in prominence as filling that function. The stable coin that when you're feeling really antsy about your investment in some volatile crypto asset, you pull it out, hold it in Tether on exchange, and wait for things to calm down, or wait for the what you think is going to be the bottom to buy back in, or wait for a new thing to emerge that you want to buy into. And so this chart simply shows the quite impressive increase in Tether volumes. The spikes there tell a story, but also the kind of steady growth. And if you kind of imagine an average line along the middle of those peaks and valleys, you can see that those volumes have increased significantly across exchanges. So that's pretty much it, I think, for from my side of the presentation here. I guess unless there are any questions specific to that, I'll hand it over to Christine, who's got some other slides to run through.
Yeah, okay. Thanks, Galen. I think that last point ties in really nicely with this next takeaway that I'm going to be going a little deeper into, and that's Web3 adoption. If we can actually jump to that slide.
You want to go to that first?
Yeah,
no problem.
yeah. Web3 slide first. But we can come back to the look back slide maybe a little later.
Okay.
But yeah. So one of the use cases that we also delved into outside of institutional participation, store of value, etc., was Web3, and this idea that blockchain, if it's not used as a currency or something similar to a commodity like gold, perhaps blockchain can be used as a revolutionary technology to create new games, create new gambling sites, to create basically anything that we can think of right now as a digitized service that is decentralized and not something that any one centralized provider like Facebook or Amazon can control, but that is really in the hands of the users. And we think one of the takeaways from the report was that Web3 adoption so far hasn't been showing very much signs of liveliness. We've seen the emergence of this new dApp category called DeFi, or decentralized finance, grow and plateau over the 2019 year, but that hasn't really affected the numbers of the Web3 industry as a whole. So in the next slide, we can see some of those figures come to light. And these two charts actually have a couple different interesting takeaways. First, when we're talking about the dApp industry, as you can see, all except DeFi had a pretty rough year in 2019. DeFi is the dark blue line in those two charts, and gaming and gambling are the yellow and the green lines. So for most gaming and gambling applications on Ethereum, user numbers were on a downhill trend last year. However, users for DeFi applications stayed pretty constant throughout that same time period, according to numbers from dApp.com.
Can I jump in with a question?
Of course.
What was the spike in the middle of last year? What's that for the DeFi usage?
DeFi usage on August to September.
Yeah. What happened there? What do you think the main spike was? Maybe the price was rallying and people were betting on DeFi platforms?
It could be. Actually, in the next slide, we do have a show of the price during the time, but basically overlaid with how much ETH is locked into Ethereum. And if we can perhaps take a look at both. So the spike happened in August, and I think in the next slide we can see what the price was looking like in August. And it does seem as though the Ethereum price did rise in July, so it could be perhaps a lagged effect of that price. I'm trying to think what other major events there were to boost the bullish case for.
Yeah, you can see that
activity.
same spike type pattern there in this chart, although it's less dramatic. So I think it does at least give you some faith in the user data, which I think is maybe a little more interpretive than this. This is straight up ETH locked in DeFi lending, right?
Yeah, and that's the other thing. I think we're talking about different metrics too. So users, the number of users and the number of DeFi applications versus how much value is in these applications and users could be telling very, very different stories. But it is interesting that both of them are telling very similar stories, that as the price went down, the interest in measured by value has been going up.
I don't think we didn't really spend time looking at what would have caused a spike there, though. I mean, there may have been some event, some new release or something that really brought attention to DeFi at that time. That'd be interesting to go back and look at.
Yeah.
But I think Christine, if we can go, do you want to go back or to the previous? Yeah. I mean, I think my takeaway from this particular slide is we have numbers that are small here and they are getting smaller.
It's especially surprising given the hype around DeFi applications 2-3 years ago compared to now. There's still a lot of hype around DeFi applications.
Yeah, I mean, DeFi is growing. Maybe it's early days, but I just if you can't make a gambling app grow on the internet, it is a bad case for a gambling app.
And in all fairness, it might be that the relative interest and the hype around gambling, if we think back to, a couple of years ago, that's when the hype was the biggest.
Yeah.
For CryptoKitties, the gaming application for CryptoKitties in 2017, that was when it was the biggest. Maybe DeFi is having its time to shine, and who knows, in the next couple of years, it could be a remnant of the trends that we're seeing for gambling and gaming now. I think it's the newfangled, there's this, I feel like there's a more scientific term for this, but sometimes when something is new and noteworthy. There's a lot of initial interest that does kind of overhype numbers, but over time you can really tell whether or not that hype had any real substantial significance. And despite the numbers being quite dismal for 2019, I have heard other industry participants saying that the technology behind Web3 and decentralized application technology is really only just getting started, and that perhaps the infrastructure has still not yet been built for these applications to truly see greater user figures and numbers. Of course, the jury is still out, and that's still a major hypothetical.
I mean, I don't know. People who make that argument are like pointing to a dirt track with weeds on it. And they're like, we need to build a highway here because this road won't handle the traffic. And you look around and you're like, what traffic?
Why would there be any?
Why would I invest in this road?
There's actually quite a lot of investment going into
there is,
as we see in the next slide, where
to what Christine was saying, though, it's not that these aren't the killer apps. It's not that. It's just that they're not ready yet, perhaps.
Maybe the killer app hasn't come along. I don't know. I mean, I wouldn't dismiss the Web3, universe, but I do think like these user numbers are depressing. Like, let's be honest, right? I mean, let's not get depressed about it, but
but that is also why, outside of using user numbers and number of dApps, we took a look at some other metrics to possibly gauge dApp growth, and specifically for decentralized finance, I have been hearing arguments and comments that user numbers aren't always the best way to measure how a dApp is doing, especially if it's for DeFi. Let's look at value, which we can see has significantly grown over the last year during a bearish market cycle. You can see that ETH supply locked in DeFi applications on Ethereum grew from 1.75 to 2.75%, which does make it a breakout success, defying the trends of other dApp categories in the year. And you can see that in the beginning of the year, there was quite a large, almost like 99% maker dominance. But by the end of the year, you see other competitors also gaining some significant traction.
And they're all heading in the same direction.
Although maker, I mean, I would say like for all the people who have said, Compound has taken away market share from Maker, I don't think this chart really tells that story. Compound had some initial growth, and then they have, stayed. All of the alternative, the newcomers, if you will, are like that. Not to take anything away from them. Successful launch, good job, but obviously Maker is growing at a faster rate than any of them.
It is. Maker is.
At least that's the story this chart tells me. Maybe I'm reading it wrong. But.
Definitely, I completely agree. I think Maker's dominance continues to be untested, although there is a diversification of the DeFi market that I think is apparent through this chart as well. One of the things that I think would be interesting to watch out for in this new year is with Maker's latest upgrade, the multi-collateral DAI, which is this technological upgrade where instead of just locking your ETH, you could lock other types of ERC20 tokens to loan out DAI stablecoin, which is the US dollar pegged basically version of Tether, but that is managed by a decentralized protocol. I think with that new upgrade, I'd be interested to see how that affects Maker dominance moving forward. Will it strengthen it? Will there be some kind of a horrendous code bug that possibly marks a downward shift to this dominance that we're seeing? I think it would be disastrous, but I think with anything that's so code-based, anything in the Web3 space, those kind of technical flaws can be fatal.
No doubt.
And it does enhance the risk in the Web3 adoption use case, but it also does add to the excitement and the mystique of it.
That's true. And for everything that goes wrong, that's one thing less that can go wrong in the future. And we only really learn how things work once they don't.
I'm a sort of a perma bear, so I want to point out something about this chart that I think is certainly raises a question for DeFi, not necessarily a negative, but to your point earlier, Christine, about whether this is just the sort of initial enthusiasm of early adopters. Or is this sustainable? Will we see this line continue to go up? And I think at some point, DeFi comes up against the limit of people who have already bought into Ethereum for other reasons, people who already hold ETH or maybe other crypto assets. Let's just say because of multi-collateral DAI, let's say people who already hold crypto assets is the upper bound of DeFi's potential growth. And then there's a breakthrough where DeFi starts to bring in people who are buying crypto assets just so they can put them up as collateral on Maker, for example. Right now, it's difficult for me to imagine somebody doing that, although we've had some conversations where we imagined like the highly risk-tolerant merchant who doesn't have access to volatile assets, wants to take some money out to run his business and also at the same time speculate. I think, it's possible, but I have trouble imagining a kind of a mainstream use case like that with DeFi in its current state. And I think this chart actually tells that story because of the way the DeFi volumes seem to move against the price of Ethereum.
It's highly correlated.
Yeah. I mean, I could say whether it's correlated or not just from this, but if you look at, when the number go down, the number go up. Mm-hmm. And to me, that indicates that you've got people who are like, well, bear market, winter time, hodl, let's see if I can get some, some cash out to do whatever I need to do, or, earn some interest. And
or leverage even.
Right. And so I'm, I think, one way to read this chart could be like, look, this is still a fairly circular use. Mm-hmm. People who have already bought Ethereum for other reasons are using this. It's great, but what's the engine that breaks DeFi outside that that population? I think is the question that DeFi proponents need to be asking.
Right, and it still remains to be seen whether or not that kind of relationship is something we're going to be seeing in this new year. Yeah, I think that's a really good point. And the use case, it's like a use case within a use case. We're talking about one of the breakout successes for the Web3 use case being DeFi, but within DeFi, there's these motivations that could, like you said, limit its ability to grow and could be limited to a very small group of users. I think one of the things that might push DeFi into broader adoption beyond just the crypto bros, so to speak, is perhaps real world events. Basically, who are we seeing using DeFi in politically unstable countries, in countries where the economy is and the currencies available in that economy are not trustworthy, where the banking systems and the financial institutions are forcing people to find a third way. Yeah. I don't necessarily know if the user interface and the user experience is so accessible to such people and populations, but I have been seeing greater initiative, especially by the MakerDAO Foundation team, to target that audience and to drive that narrative. And I will be honest, there's not too much data yet to support that narrative. However, it's a project that's just beginning and has yet to fully reach its maturity or death. We shall see. Yeah. Interesting. So on that lovely and positive note,
where do you want to go here? To the past or to the future?
No. Let's just stay on this one for just a few more minutes, and then I will go to the first slide that we started with. I just want to make another quick note. Actually, if we could go to the slide right before this one. Sure. I do want to make a quick note that yes, from what we've been saying, DeFi has been a breakout success. But if you look at the user numbers and the number of dApps, it has still yet to surpass the users and the numbers that have already been gained in past years by gaming and gambling applications. Mm-hmm. I think that's important to just highlight because while DeFi has been a breakout success, it still has a gap to cover before it's considered to be the ultimate use case for Web3. And the most popular type of dApp on Ethereum, which is the number one dApp platform, the number one dApp blockchain in this industry, it remains the most popular type of dApp remains gaming for that platform, both in terms of dApp numbers and users. Just last year in 2019, there was a new Ethereum gaming dApp called Gods Unchained, which launched and proved to congest the Ethereum blockchain to levels not seen since CryptoKitties. And for those of us who are listening who aren't familiar with CryptoKitties was this gaming dApp that honestly launched dApps in Web3 to a new level of adoption and usage never seen before. It congested the Ethereum blockchain so much so that people were waiting days for their transactions to get through. So just the fact that this past year there was another app, not in the sector of DeFi, but in the sector of gaming that did reach those same numbers again, is quite notable. So while it's
the killer app.
I'm gonna quibble.
Okay,
I mean, I'm saying like 2 fail whales in 2 years, right?
Fail whales?
Yeah, like early days of Twitter. Twitter was, I don't know, not such great shakes on the back end.
Yeah.
And with the new users picking it up, torrid growth at that time, a different story than today. But at that time they were Facebook, and they were constantly crashing. And when they did, it would have this cute logo of a whale attempting to be lifted by like a dozen birds.
Yeah, but it's a sign of
a dozen little birds lifting the whale, and like the demand was just outpacing the engineering's ability to handle.
Good.
And
right.
You're right. So I mean that's a good sign in a way. Obviously,
right.
we'll solve those problems so you don't hamstring the growth potential. But I mean, I would say like based on the evidence of a couple of incidents that outpaced the Ethereum network's capacity, I don't think we're at a point where we can say, hey, gaming is really straining the infrastructure. Again, I go back to that highway analogy. You're going to ask me to build an interstate, through what's so far a pretty sleepy hamlet.
It's not straining the interface of it. It's not straining the Ethereum blockchain again,
right.
But it does indicate that DeFi is not reaching the same levels of usage as these other breakout successes that are being seen in the gaming and gambling space. I think you're completely right that just from the examples of CryptoKitties and Gods Unchained, you can't say that Web3 is going to the moon. It is the ultimate use case. Gaming is the killer app. Who knows? For all we know, I think there could be other categories of decentralized application technologies that we have not yet even thought of, especially seeing as DeFi, nobody was saying this term 365 days ago. It was not many people, at least. So I think one of the things that we should keep an eye on is not just the growth of the DeFi space moving forward, but keep your eye also on the gaming and the gambling space, which people have already commented on in past years, and perhaps new ones that are still yet to be created. So on that kind of forward-looking statement, I do want to take a look at the timeline. I'm sorry we're bouncing around so much. I really should have ordered these a lot better.
One question on the gaming, or one point rather on the gaming front. We shouldn't trivialize it as thinking it's just people playing games. Because gaming has huge repercussions for the study of economics, for tokenomics, for finance, even. The gamification of all sorts of things is something we're learning more about through these new applications. So yes, CryptoKitties was cute, but it also taught us a hell of a lot about how communities work and how people make decisions. And so the potential applications, even of just gaming, is actually pretty deep when it comes to economics.
That's so true. And gaming is such a broad category, too. When we're talking about CryptoKitties, it really launched NFTs, non-fungible tokens on the Ethereum blockchain to a new level of recognition. A new standard of tokens were built, ERC 721. That's a very different game from Gods Unchained. And Gods Unchained, as I understand, is more of you're not collecting items, you're going through some kind of a mission.
There's a much more sophisticated gameplay, I think, in Gods Unchained, but underlying it is still the ERC 721, the non-fungible token that is, that basically allows you to own that without an intermediary. to own the card itself that you're using to play without having an intermediary that says you own it.
Yeah, there's still gaming items that are tokenized and that you would be able to trade with another person. But I guess the points that you'd be able to receive and the kind of mission that you're on as a player of Gods Unchained would be slightly different from CryptoKitties, where you're not necessarily winning and losing points. You're just
You're just sort of developing. I mean, the interesting thing about it is that all of the fun stuff happens off chain. All the fun stuff happens in a game environment that's not decentralized. The only decentralized piece is your title to owning that virtual good, which, the sort of, certainly there's people who are interested in that, who hate the game that the game companies own their virtual goods that they've worked so hard for. But I think so far that's proven to be a pretty small percentage of the game playing population. There's a question as to, will that sentiment grow? Will people start to care more about these issues?
Yeah.
I think if that happens, that will certainly drive adoption of DApp-based games. But so far, little evidence that it has happened outside of a couple of incidents, like, for example, when Gods Unchained got that spike of activity around the Hong Kong protests and the Blizzard Entertainment fiasco.
I'm actually quite surprised to not see more hype around this idea that you would be able to exchange very high-value assets in a game. Obviously not just within the game, but between different games. If all of your decentralized applications are on Ethereum, technically the sale and the exchange of these ERC-721 tokens would be a lot more seamless than having to use something like eBay or Kijiji or, Amazon to sell your very high value goods. And I thought that would be a really big use case for the gaming industry, that it would be able to capitalize on.
I think that narrative kind of misses the economics that the game publishers, they want to keep you on their game. They don't want you to take your diamond sword from Minecraft and bring it over to Roblox, right? They want you to stay in their platform, spend more time there, spend more money there, do whatever it is their, is how they make their money. So I think, unless you see like really tremendous user demand for that kind of portability, it's unlikely that the large publishers who have the resources to produce games that people really, really like. I think there are two things that could drive that. One is like everybody gets up in arms and says, give us this now. And the other thing is that somebody in a garage who's, got a head on fire about this stuff comes out with a game that just takes off, and that a lot of people are using, and that has this kind of, portability or Ethereum or decentralized feature, or builds a sort of a game environment in which other developers can build games that also interact in this way, and it really becomes a hit, right? It becomes the next World of Warcraft.
There is no doubt in the world that, of course, gaming companies would want to keep your data and your personal information and keep you on their platform, but who is driving the creation of these apps? It's users. Who are the people who want to be using Bitcoin? I don't or create cryptocurrencies for the sake of a decentralized digital form of money. It's not the banks. It's not the financial institutions. It's these regular Joes that are kind of fed up with the way that things are.
And so if one of those people comes out with a hit game, I think you could see things change, right? Or if a lot more people get fed up, I think you could see things change. But so far, I don't see any evidence that either of those things has happened. There isn't something that's caught fire in gaming that has Main Street potential.
Not yet. It's true. And I do think that it's true that because it is kind of the users that are driving this, you're not seeing a lot of adoption. You're not seeing great numbers. Whereas if perhaps a very big gaming company such as ESoft, is that what the name is?
Electronic Arts?
No, there's like esports or something. If they were to get into this space, I could see a lot of numbers. But I do really think that the people who are driving these figures, the data that we're seeing on this slide, they're not the big gaming companies.
I shouldn't be talking about the gaming industry because I still play Nintendo.
But thinking of that, one of our listeners sent in a question about game economics, which actually raises a very interesting point. That when we're talking about the gaming applications of these terms, we're not just talking about tokenomics, which are themselves very important, and that's a whole separate webinar about doing, but we're also talking about game economics, which is different? And are the big game manufacturers looking at this as a different way of driving not just user adoption, but also different types of engagement and monetary inter-exchange within their, within their environment?
I could see it happening.
I would be very skeptical of the idea that they would. I think that would require a kind of paradigm change in the way that they look at their revenue models. We've already seen a fairly recent paradigm change, right? It wasn't that long ago that the revenue model was you sell a lot of licenses to the game. You sell cartridges, right? That revenue model is still robust, right? Console gaming is huge. But now you've seen the rise of the free-to-play games where it's virtual goods, purchases. That really is the revenue driver. So, I mean, we're still on the upswing with that revenue model. I don't think we're anywhere near some sort of maturation or saturation point with that kind of model where we would start to look and see, okay, what's the next thing that's going to break the mold?
True. Similar to the TV model. So back in the day, especially in the United Kingdom, when I was growing up there, you had your TV license, and that's how the TV companies made money by a TV license.
Oh, sure. Yeah.
So
that's right.
the licenses is perhaps the model at the moment, but it's certainly not necessarily going to be.
No, I mean, I would say, like, for the long term, it's highly likely that something like this becomes the next paradigm. I just don't think we're we're not on the cusp of that paradigm shift at this point in the gaming industry. And I mean, I say that as a non-gaming industry analyst, and this is not investment advice of any kind. So take it with a huge grain of salt. But I do think, like, anybody who's selling you a narrative saying, like, hey, the gaming industry is going to adopt this. This is going to happen. I think that should be viewed with skepticism.
Okay, we're going to look into the gaming industry more often, but let's move on to Christine's timeline.
Definitely.
Yeah. So what should we be looking at to happen in the next year if it's not the gaming industry adopting Ethereum?
Well, mentality shifts. I think mentality shifts to that point are really important, not just in the gaming or Web3 adoption space, but I feel like for any of these use cases that we talked about in the quarterly review, changes in narratives are often driven by changes in sentiment and how people sentimentally take a look at Bitcoin and cryptocurrencies differently. So I did already touch on looking at MakerDAO and their multi-collateral DAI launch. And do we have that up here?
I believe so.
Totally fine. One of the things in 2019 that we had highlighted in the beginning of the year was the Ethereum hard fork Constantinople. In 2020, there are different Ethereum core developers that are saying in 2020 we could see the launch of Ethereum 2.0, which is Ethereum's transition from proof of work to proof of stake system. And as I said, Ethereum is the biggest dApp platform out there. So this upgrade would have huge ramifications on the dApp ecosystem. And while the first phase of the upgrade is said to be a very soft launch in that it's not going to be changing anything about the Ethereum main chain, it's a separate blockchain that they're going to be rolling out piecemeal and building on top of. I still think that a lot of developers, a lot of investors, a lot of people who are watching their eyes closely on Web3, they're going to be looking at how that launch goes, regardless of whether or not it actually impacts, the mechanics of Ethereum mainnet blockchain as we know it today. The results of that launch are still going to be heavily looked at and scrutinized.
Huge.
So Ethereum 2.0 is one of those events that I wanted to highlight for the look ahead. And kind of tie back to why we highlighted Constantinople.
And we actually don't have multi-collateral DAI on here. So.
Well, we mentioned it in this webinar, so
anyway,
for everyone who's listening in.
What do you think? I mean, if we're looking at these as the events of 2019 that are likely to have impact going into 2020 and beyond, what are the sort of categories that we can look at here? What are the sort of big movements that maybe began or gained momentum in the past year?
Because I have the most interest in Ethereum and Web3, I'm also going to be highlighting the ERC20 transaction surpassed ETH. I think already.
Why is that important, though? Because I think a lot of people might sleep on that.
I think it's really important because we're talking about the utility of the Ethereum blockchain. If it is for the creation of decentralized applications, you're going to be seeing a lot of more transactions on the blockchain where people are transacting in these newly created ERC20 tokens that are specific to a game, rather than here, let me send you 3 ETH just for the purposes of speculation and wanting to hodl it, kind of similar to Bitcoin. And just in this month, we saw that stablecoin activity specifically, which is an ERC20 token such as Tether or DAI, that activity has surpassed the number of ETH transactions, has surpassed in value for ETH transactions on the Ethereum blockchain. So I think the narrative of, look, the number of ERC20 token transactions are increasing and have surpassed the number of Ethereum transactions on the blockchain was a key, very important kind of milestone in 2019. We've already seen the milestone of stablecoin value transactions on Ethereum being larger than the value of Ethereum transactions in the month of January. So I'd be interested in just seeing how much more growth can we see on the Ethereum blockchain for different value adds.
I want to jump off from that and highlight what I think is kind of the biggest chunk of this, which maybe is more Bitcoin focused, but is the Xi Jinping and Jerome Powell both making public statements about Bitcoin and the sort of momentum gathering around central bank digital currencies. I think, certainly sort of crystallized in Switzerland at the World Economic Forum this January, but began and really started to gain momentum in 2019. And I think the people who were, selling the Xi pump were misguided. I don't think, there's going to be some massive adoption of Bitcoin on the ground in China that's different from what we've seen before as a result. But I do think that Xi Jinping's comments and the weight of Beijing behind a digital yuan and blockchain-based technology is going to accelerate that issuance of stable coins by governments, and I think that's going to be a powerful sort of win behind that sort of momentum that you're already seeing in the growth of the use of stable coins for various purposes. I do think there's a tremendous amount of potential and interest there.
It does also sound like we're seeing a splintering of the conversation. I mean, we've long enjoyed the debate over whether Bitcoin is money, especially given the conversations that Xi Jinping, Jerome Powell, and company are having. We've also long heard the debate question mark around, is ETH money? And with the flippening, if you want to call it that way, of now ETH-related applications having greater value than ETH itself, or the transactions itself, then that would shed light on that debate. ETH is not money, but what it generates could be seen as money, such as a stablecoin, such as...
Right, although that may raise the question of is Ethereum overvalued? I mean, is the value of ETH, which it did come down toward the end of 2019, is it sort of pegged to this notion that this is the oil of the new global data infrastructure?
Yeah, it also brings to light again the debate that we've been having for the past few years, and does the value accrue to the protocol, or does the value accrue to the applications on top of the protocol?
Right.
Frankly, I think that there is a bit of a reckoning coming with the price of ETH as it butts heads with this reality. I think right now there's a lot of, before maybe perhaps in 2017, 2018, there was a lot of speculative investors who would invest in altcoins and anything other than Bitcoin, thinking that the price would go up. It would be a good way to make lots of money without perhaps doing the most research on, in the long term, is the value of this currency similar to Bitcoin? Is it supposed to increase? Is it supposed to be a stable store of value? And for Ethereum, it's an inflationary currency. There is no limit to the supply of ETH.
Yeah.
And in that sense, you have to question.
I don't think the ETH is money narrative is a very good one for Ethereum. I don't think it's very supported by data or rational thought, and I also don't think it's actually very positive. Like, if ETH is money, I think Bitcoin is probably better money. I could be wrong about that, and I'm sure there's lots of people who disagree with me. I know there are, but I can't. They will, and they are already reaching out to me on Twitter with 1,000 pointing fingers. But the
Bitcoin emojis that we can now use on Twitter.
I mean, I guess what I'm saying is, I still don't understand the ETH is money narrative. I don't get it.
But the fact that we're even having a conversation shows how open this is to developments and trends and the changes in narrative as we go forward.
Moving ahead to our look ahead slide for 2020. This is kind of what's in store, what we should be watching in the coming year, or the current year rather. When we wrote it, it was the coming year. Mm-hmm. Christine, what are the sort of big categories of takeaway from this slide?
I cannot wait for the Bitcoin halving. Oh my goodness, the amount of memes and the amount of just controversy that is already starting, the amount of debates and discussions that we're talking, is the Bitcoin having priced in? Is it not priced in? What's going to be happening to mining?
We were having a great meeting this morning about what metrics are we going to be watching in the run up to this.
Yeah. And there's quite a few to look at.
Are there Bitcoin halving parties? I mean, it'll be hard to put it on the calendar.
Yeah, right.
I don't know exactly what date it will fall, but I mean, you could put it on the
There were, I remember
on
4
the
years
blockchain
ago.
calendar.
4 years ago, there were many. I remember that. I remember watching the blockchain 4 years ago. So exciting. And look at
it's like a New Year's ball drop.
So exciting.
Yeah. Okay. Well, I hope something else doesn't drop. Right. I hope the ball is the only. I hope the reward is the only thing that gets cut in half. I mean, look. I think there's a significant possibility that you can see a big run up. You buy the rumor, you sell the news. You see a big run up ahead of the halving. And then disappointment when the actual event itself occurs and a crash.
None of this is investment advice, obviously.
I would not be surprised if that happened.
Yeah.
I'm sure that disclaimer is taken care of somewhere in this presentation.
We do hear a lot about the efficient market hypothesis, and surely it's all priced in and everything, but there's so many variables going into the mix. And sure enough, 4 years ago, Bitcoin was a very different environment than it is today. Indeed. So basically, we don't know. But we're going to be looking into it. You guys are going to be hearing more about what we're up to there.
So I think also the U.S. election is an interesting aspect to look at. I heard a comment, I think, from Jake Chervinsky, who is like House counsel at Compound, if I'm not mistaken. And he was talking about how he thought it was likely that it's not likely that the Democrats and the Republicans will harmonize on the issue of cryptocurrency. To the extent that it is an issue in U.S. politics, you'll see them sort of stake out opposing positions on it. If one party says, we're the party of crypto and embrace digital, like if Andrew Yang becomes the Democratic nominee or something, which seems unlikely, but it could happen. Right? And there's many other crypto-friendly legislators. So if that sort of takes hold, then the Republicans will sort of take the opposite stance. This is dangerous. Or vice versa. I do think you're likely to see some opposition, which will not be good for crypto, but it's the divisive nature of U.S. politics. And I think, we're likely to see sort of battle lines drawn over crypto if it becomes an issue in the public sphere.
I'm a little bit skeptical about whether those battle lines will actually be newsworthy to anybody other than crypto media outlets. Because right now, during the debates between Andrew Yang and some of the other Democratic candidates, we've seen it mentioned maybe once or a couple times by Andrew Yang, but I haven't really seen that coming up during the debates or during
maybe the mobs
conversations
on Twitter should be turning their energy to other purposes, like pressuring CNN moderators to ask questions about Ripple during the debate.
So mobs? Whoa! I have never heard of these
mobs. I mean, like crowds, like the crypto Twitter adherence to one asset or another. I mentioned Ripple, but it could be Ethereum or Bitcoin. Why are we bickering with each other when we should all be pestering political debate moderators to raise these important issues in the mainstream media?
Twitter if they did.
That would be...
No, so we have to start wrapping up. I'm afraid. It's a pity because I could sit here and talk to you guys for ages. It's been a lot of fun. I have a couple of questions that have been sent in, a ton of questions that we won't be able to get to, sorry, but there are a couple that caught my eye that I think might be worth looking at. Somebody wants to know about what we think is going on in Germany, and I'm pulling this out. It's, we're not sitting in Germany as we speak, but it's relevant to the regulatory shifts that we could start to see in the sector. There is apparently legislation in the German parliament that would allow German banks to offer crypto accounts. And what would this mean to exchanges, market infrastructure more broadly? Is this a threat, or do you think it's a support? Would this be a step towards mainstream acceptance, or could it be total absorption of the crypto infrastructure into traditional finance?
I think the greater extent that I'm not familiar with that specific bit of legislation in Germany. I do think that's interesting and would like to. So I'm glad it's been brought to my attention.
Yeah,
but I would say generally that I think it's positive when governments provide regulatory clarity. I think it's probably, people complain about the lack of regulatory clarity. Probably most of them are just complaining about the regulations. But I do think that there are some governments that have gone further than others in terms of establishing and saying, this is what you can do. Here's what you can do. Here's what you can't do. Japan is one, although some would say their regulations are too restrictive, and I think there's a case to be made that that's true. But I would say at least you sort of know where you stand. So, I would look at that as positive. Now, that question of, does the sort of ideology and purpose of crypto get subsumed by the traditional finance infrastructure? Well, look, I think if that happens, then maybe the use case and narrative and ideology of crypto weren't that strong in the first place. I would bet that things kind of go the other way. That banks become participants in something larger that is held up and given momentum by
funneling funds to rather than from
the participants rather than sort of controllers of.
Yeah, that's an interesting take. We'll definitely keep an eye on that. I'd like to thank all of you listening for joining us today. Thank you for sending in your questions. We will be circulating a recording of this and uploading it to our webpage. You'll get some notification of that. We hope you enjoyed this lively conversation. We'll be having more of these. Please download the quarterly report if you have not done so already. We also have many other reports that try to explain crypto market infrastructure and concepts in traditional finance terms, to explain how different this sector is, how interesting it is, and as we've seen here today, how much we have yet to grow and learn together. Thank you very much for joining us. Talk to you next time.